Let's begin with the Federal Reserve. My first guest says that the Fed is well positioned to do nothing for a while. I'm going to bring in Yardeni Research President Ed Yardeni. And Ed, we're going to put up here just the different changes that they made in their economic assumptions yesterday. And I want to kind of go through them line by line because there were big changes, whether it was real GDP, right. Unemployment. Unemployment wasn't necessarily changed from where they had it, but from where we are now to next year, inflation. And, you know, in the release, I'll start with the inflation part. Powell, he talked about core PCE, right, coming down. It's 2.5 from 3.0. I want to get your thoughts on just where we are and from an inflation point of view, because it is kind of ironic. Powell did talk about inflation being up and it's remained somewhat elevated, but by the same token, they're telling us it's going to go down pretty dramatically next year.
Right, absolutely. I think what Powell was saying is that the reason that inflation isn't down to 2% now is because of the tariffs. And I think that kind of makes sense. Durable goods inflation has picked up coincident with the tariffs. But I agree with Powell that it's going to be transitory and that by sometime next year we should be back down to 2%, which I guess is why he felt emboldened to just go ahead with a quarter-point cut yesterday.
So on the jobs front, again, you know, this kind of helps explain it. Powell noted that we've averaged 40,000 jobs since going back to April, but that the actual number could be closer to a loss of 20,000 jobs. We get the number on Tuesday. It feels to me that maybe Powell's also bracing for some sort of bad number on Tuesday. Have you modeled that out? Is it possible to right now?
It's very hard to model it out. As you know, the revisions are frequent in the data. There's also something called the birth-death model that's basically plugs in an estimate for what small businesses are doing. Are they hiring people or are they going broke and firing people? So it's very questionable data, at least on a preliminary basis. But there's no doubt that employment has slowed, and it's slowed for all sorts of various reasons that probably the Fed can't do much with lower interest rates to improve.
So we'll get to this, I don't want to call it, maybe it's controversial, temporarily buying $40 billion in T-bills, right? And here's the thing. It's a situation where one man's QE is another man's reserve management purchases. What side of the aisle do you come on this? Is this QE or potentially the beginning of QE?
I agree with both of you.
I think, yeah, let's leave it there, right? But the markets seem to like this, though.
Yeah, I mean, for now, I don't think it's QE technically speaking, but on the other hand, practically speaking, it does add liquidity to the reserve market, which is a good thing.
I got to talk about the dissent, 3 dissents, most since 2019. Powell made an interesting comment yesterday. With each step lower, as they get to the neutral rate, you're just going to lose support among a few more participants. And right. You know, of course, he says you're going to need data to motivate those participants that want to join with in this case, a majority cut. But do you believe that this dissent that we're seeing, this friction, it's all based on different interpretation of data, or is there some political motivation there?
I don't know. I kind of doubt that politics is that big a deal in the current situation. You would think that with the headlines with President Trump making a big deal about the Fed and monetary policy that it would be. But I don't get that sense looking at the dot plots. I think it's been fairly consistent that there's a range of opinions. Powell's been successful in keeping that range and bringing it into consensus. Now, not so much. Right. And I think that's because, you know, look, the Fed itself raised its outlook for real GDP next year because fiscal policy is going to be very stimulative. All the more reason not to cut anymore. Right.
Although he didn't actually admit that part when he was asked directly. He didn't mention the big, beautiful bill. Less than a minute ago, I thought there was a funny part in your piece, because Powell talked about it doesn't feel like a hot economy where you start talking about Phillips curve type inflation. But to your point, they did raise the GDP next year. However, you note that after that, the GDP, and by the way, 2.3 is interesting. It's good. But after that, the GDP numbers sort of go back down a little bit. You say he's not on the same page necessarily as you with the Roaring 20. So are you going to go back to the drawing board?
No, not me. I mean, they should go back to the drawing board. I mean, Powell just mentioned the word productivity several times. he actually was pretty enthusiastic about the strength of the economy, GDP, and he did allude to productivity-led growth, which is exactly the thesis of the Roaring 2020s.
Yeah. Well, you've been spot on, Ed. Thanks a lot. It's a fun time. We may call you Tuesday if that number's too crazy. So buckle up.
Okay.
All right. Thanks.
Sure.
Of course, the